What's your take here on this market, particularly tech?
And it feels like it's been more than a month now where we could describe big tech performance as just not well. And I think the AI trade just in general as performing not very well. But here's my bottom line. If you zoom out, if we kind of play forward into the future and look at what happened over the last couple of years, I think the story will still be that we have 2 to 4 years ahead of us where AI will continue to rally. We will continue to see big CapEx builds and ultimately adoption from consumers. So I still think we're in that period. But like, what is happening here, I think, is the core question. If you're a believer in the AI trade, sort of how should you think about what's going on right now? And I think it's really important to remember we've had 2 years right now, basically, of almost no turbulence for the AI trade. From the end of 22 to roughly the beginning of this year, this is the first real challenge I think the trade has had. And if you zoom back to the dot-com era, the first time that the dot-com trade was in question, it actually took about 200 days from the point where that turbulence started to returning to a new high on the NASDAQ. And so I'm not predicting we need 6 months of this kind of turbulence, but I do think if you believe in AI, you have to be patient and stick with the names you really believe in.
But I mean, I can be a believer in AI, and just like I was a believer, like the collective I was a believer in the internet. That didn't mean that I need to pay the PEs that the stocks were trading at.
I think it begs the question of what strategy then, to your point, Scott, do you want to take as an investor in one of these mega tectonic tech shifts? And with the AI trade or the dot-com trade, if you want to try to trade, you know, when the trade gets too hot, you try to exit, you try to time it. The risk that you take is, you know, AI stocks could go down another 10, 15% from here. I wouldn't be surprised by that, but I think valuations have gotten more reasonable. But the risk you take is they could rip 20, 30% in your face, and then you beg the question of when do I get back in? And so I'm thinking about this trade more on that 2 to 4 year time scale. I want to make sure I have enough exposure so I'm not kind of trying to get in and out and missing the bigger picture or the smaller picture.
When you say AI stocks, that's, you know, a generalized comment because it can cover so many, can go down 10 to 15% more. Are you talking about the mega cap, the hyperscalers, or are you talking about some of the momentum names that are more tied into data center and the powering of those?
More the mega caps. And then I do think I would go more on the software side a little bit in terms of some of the newer exposure that we've had in our AI powered portfolios. But yes, the mega caps, I think that 10 to 15% range, to me, that still feels like the near term downside risk in the worst case scenario. And I think certain names, you know, NVIDIA, it feels like it has been blown out. That's really the only mega cap we own right now in our LIVR Intelligent Alpha ETF. On the software side, which I do think things could be a little bit more interesting there, where there are still some growthy names that have had some healthy pullbacks. You look at a HubSpot, you know, I think that that's a name where they are obviously building AI tools for their users. We've had this phenomena of vibe coding in the software side for developers. And I think this idea of vibe marketing, where people who maybe they're not designers, they're not expert creatives, they can go and use some of these AI tools and create really compelling ads. I mean, they look professional. I think companies like HubSpot could benefit from that. You might start to see some inflection in their numbers in the back half of the year from it.